So GameStop issued a convertible bond, and when the world was looking at this, it looked like they were doing the exact same thing that MicroStrategy was doing, which is they're transforming themselves into some sort of a holding company for Bitcoin. There's an alternate take on what's really going on here and what happened with the convertible bond. Probably a good time to check back in on what's going on with GameStop. So let's rewind a little bit and set this up. So the last time we significantly talked about GameStop, we were speculating that there might be a Bitcoin purchase. Then there was a Bitcoin purchase. And it seemed like with the quarterly financials, we should see a rise in price and a bunch of interesting stuff should happen. But none of that really played out. And actually, the price went down. So anybody that's familiar with GameStop is used to this. Anybody playing GameStop says any good news causes the price of GameStop to go down because that's just the way that this stock has been trading. Because there's so many people that have a vested interest in trying to see this go in the wrong direction. So what really happened with convertible bond? We thought we'd have Dan back on, who's been researching this and has been watching the stock pretty closely. And you found something interesting about there's a theory out there about what really happened with the convertible bond. Dan, do you want to just kind of set this up for us? So you found something, you were able to see something, and the convertible bond is maybe what, a way that somebody's getting out of their short position?
That's the theory I saw on X. There's this guy, All Things Financial, some numbers, and this bald guy, and he posts these 10-minute posts, and he's called a lot of things right, like the yen carry trade with the swaps, and this latest theory is that, and kind of in response to some stuff that's been happening on Superstonk, where people are complaining about the CFTC telling UBS that they don't have to um, up their margin requirements due to the
Well,
bags.
wait, give us that background again. So UBS and Credit Suisse, they're involved in all of this stuff. So just give us a quick setup because I think we blew past the who is UBS again because
Sorry, yeah.
some of these things are hard to keep track of. Even I, who have been in this, whole saga and story personally, like I've been following it pretty intimately. I forgot that Credit Suisse was even involved when this guy started talking about it.
Right. So uh, everybody and their uncle has been shorting GameStop forever, and Bill Wong was in the news a lot a few years ago, and because he had a lot of toxic bags and he went bankrupt and he was charged with criminal charges. And um, I don't know if it was revealed exactly what was in his bags, but I think that one of the theories was that he was holding a lot of GameStop shorts. And one way of doing that is by um, getting a bank to take that position for a swap that you pay them a premium on up front. Then they'll short the stock and you get the profits, and they charge you for the risk. So you put $50 million up and you might be able to get, $500 million worth of short interest on a stock. But if you're wrong, you lose your money. So the theory is that he did the swap arrangement with Credit Suisse, and that they went bankrupt. They were absorbed by the other big bank in Switzerland, UBS, and they have a lot of toxic assets and a lot of closed door sessions to discuss all that. The Swiss are kind of freaking out because I think their assets under management or maybe close to $2 trillion, which is much bigger than it should be for Switzerland can't bail them out.
So Huang was doing this trading. Credit Suisse got swept up. They went out of business or whatever. UBS picked up those assets
Yep.
and they picked up this short position on GameStop. And it was this weird, really long total return swap or whatever, which this kind of freaky looking guy on X, this bald gentleman here, he talks about these total return swaps. And so what happened with the convertible bond, it didn't sit there for very long, which I think shocked a lot of people who, when they first heard about it, they said, who in their right mind would buy this bond? And then all of a sudden, boop, the bond was gone. It got bought instantly.
Yeah, $1.3 billion, I think, is what they were looking to collect. And they're going to pay 0% interest on this bond over 5 years. but after 5 years, they could convert it to GameStop shares, actual shares. I
Who in
think
their right mind would buy such a ridiculous product?
exactly. So a lot of people were scratching their heads, and this guy's got a theory. He might have been scratching his head too much, but his theory is if you break down the amount of the bond by the price, divide the bond by the price per share, you get 43 million, roughly 43 million shares of GameStop. And it is the theory is that that would be enough shares to get UBS out of this short position. And so the
So
implication,
if that's the case,
yeah,
that means that they're getting off the hook. I thought all the GameStop investors were in this for phone number, price increases on the price of GameStop stock. And now it looks like what UBS is gonna just bought their way out of it for $1.3 billion. Where's the MOASS, right?
right. So that's the game we signed up for when we saw 200% short interest back in January 21, and that was the game. But that's also, I think, why they took away the buy button, because when the price goes to 500, Marge is calling everyone, and there's no escape from the black hole that is the unpayable amount of short interest. So the theory here is, well, first off, let's look at the cash offerings they did last year. The stock offerings, they raised a war chest of billions of dollars, and that brought the floor of the stock price up to about $20. You can't really go below 20 without um, them buying their own stock back or it being undervalued. So this raises the floor. So that's the I guess my theory is that this is the slow ass MOASS, and by offering this way out to UBS, they've offered them out at a reasonable price, $29 a share, and they can get rid of their obligations. Meanwhile, for us,
So wait, so this is they went first. So if that's the case, if this guy's right, and I'd encourage people to go check out this video. It's not that long. You can check it out and you can listen to the theory. So that's kind of homework if you want some to catch up on what we're talking about here, is to watch
right,
this video. So if this is the case that Ryan Cohen is going to allow for the slow unwind of these positions, then is the next step that they start negotiating with some of the other players that have significant shorts, and we see that GameStop just continuously keeps letting some of these investors unwind their short positions and they accumulate Bitcoin.
I believe so, because that's a way for GameStop to not only survive but thrive. And it's a way for all the other people who are holding these naked shorts to exit their positions without bankruptcy. And for holders of GameStop, it's a controlled um, ramp up to maybe not phone number prices, but maybe eventually phone number prices. Whoever makes a deal with GameStop next to buy their next convertible bond, it's not going to be at 29.82. It's going to be at a higher number. So
I'd like to see those contracts actually get priced in Bitcoin. That'd be fun to see, don't you think, Lucas? If they said, you know what, not only are we going to do this next deal, but we're going to directly price it in Bitcoin.
Ooh, I would like to see that. And it could be very possible that that happens. So, that this is the Bank of Switzerland, which is a private bank, but is the Bank of Switzerland, I think is also interesting, due to the size of the UBS, the history of Switzerland, what's going on in Europe these days, what's going on with the dollar. The question, as you guys are talking about that's sort of lurking in my mind, was why didn't the People's Bank of China make the same move? And I don't think that they would, but I do think that UBS might be looking for ideas like GameStop and Bitcoin for stability in a time of uncertainty instead of what they traditionally sought, which would have been US Treasuries.
Well, but hold on here. So UBS is not necessarily looking for Bitcoin or GameStop particularly as an investment. I think they're trying to get out of this toxic situation that they got into So if China were to do something similar, if the Bank of China, that would mean that they had some sort of a short position on GameStop that they didn't think that they could get out from underneath, right?
Well, I don't know what options that they would have had for getting out of that short position. Maybe they could have absorbed the loss, but I think that holding on to GameStop, holding on
Well,
to
no, hold on a minute. So, like, the speculation is that these are naked shorts. So,
Mhm.
naked shorts, that means that you've taken a position by selling a stock that you didn't have. And that means that at some point you have to repay the stock that was sold. And there's only one way out of that, and that's to go acquire enough stock that you can actually clear that off your book. Because a naked short is, in the world of stock investing, something that has what's known as infinite loss potential. Like, there is no amount of money that is a floor on the amount you can lose, because if you sell a stock at a certain price and it just continues to go up, the amount of losses that you accrue is just keeps going up as the price of the stock goes up. So if the stock price doesn't stop going up, then you just keep losing more and more money, and you don't realize the full loss until you actually make the trade and clear it. And the fear of a lot of the individuals and investors that have naked shorted GameStop is that if they were to go out and try to acquire stock on the open market, they'd drive the price up, which would drive their losses higher. So everybody has been scrambling to find these creative ways to delay what they needed to do, in the hopes that somehow GameStop would no longer exist, or would cease to exist, and so therefore they wouldn't have to close at all. But as they've acquired more and more cash and gotten their books tighter, this has become like not even a possibility. Like, there is no universe where GameStop goes out of business with the amount of cash that they have on hand. Like, they could fund operations for the foreseeable future. There's no reason why they would ever go out. And so now the idea is that they're pulling these investors to the table to close out their positions, and doing it in this creative way that then sets them up with a large Bitcoin holding on their balance sheet.
well, okay, go ahead, Dan.
Oh, sorry. I was just going to pretty much agree with Grant. That's exactly it. And I think the reason that this is the only way out for them is because, if they try to buy back the shares they own, they just drive the price up. Every time there's any kind of volume on this stock, the price goes up. And they try to divert it with dark pools. They try to put big sales in the dark pools. And some of these price increases are predictable because you can see, so many shares have been bought in a dark pool and they have to be delivered within 35 days. And then they have the consolidated audit trail that tracks these things. But there was
Ooh, that cats thing. That's
yes,
interesting. That was reported recently
$7
too. Let me
billion.
dig that one up.
Yes. This is not $77.7 billion. This isn't 77.7 billion shares. This is 77.7 billion transactions that generated errors in the consolidated audit trail system over a 4-day period. The only tool they have to keep the price low and to keep keep Marge from calling is to continue short selling this stock to drive the price down. And you can only kick the can down the road so far. The road ends. The road stops at some point.
Yeah. So these are recent. I mean, these cat errors. This was the thing that the SEC put in place. I think it went into effect last year, right? So this is not a small amount of errors. Like, this means that there is significant problems with how GME is trading. This consolidated audit trail is supposed to say where things are going awry with the stock trades, and this is just insane numbers. And this just happened. Like, this was last week.
Well, this this consolidated audit trail, that's all news to me. How long did you say UBS had been bound up with these shorts?
Ever since the bankruptcy of Credit Suisse, they basically merged and accumulated all their assets and all their liabilities. but there's a lot of stuff that has been sealed, kept from the public, eyes only in the Swiss government, and a lot of people look pretty nervous. It's been years, though. And the CFTC has been just recently wrote them a letter telling them essentially that they didn't have to come up with the margin requirements. And there's been outrage in the ape community on Superstonk. A lot of people, myself included, have written letters to complain that these rules must be applied fairly to everyone. But of course, we're being ignored.
Yeah, so the consolidated audit trail was an attempt to try to start reining this in and saying they had to report where these deviations and where these problems occurred. And so as these audit reports are starting to come out, this is this posting here. And so there's 15 billion errors. This isn't like it's not over like a quarter. This is on one day. Like these are each daily. This is how many problems there are. If you just think about the number of seconds there are in a trading window, this is a significant number of problems that are happening on a daily basis in all of these, days that happened in April, and nothing has really changed. So, who knows if we're just still getting all of these errors? If you just were to pull this up on the daily, if this is just a daily occurrence and it started ever since the reporting requirements kicked in, I'd imagine it was at the beginning of the quarter of this year that it started to significantly be required to be reported. And so here we are with billions of cat errors on GME, and this is not the norm. This is not like what you would expect to see at all.
And Dan, so does the ape community of GME think that that if they force a bankruptcy in UBS, that they're going to get the lion's share of that liquidation, or what are they expecting there?
It's a pretty diverse community. It's a whole space, 1.1 million individuals, different opinions. I personally, I like the idea of phone number prices because, that sounds great, but I don't see a reality where that actually happens, where all these people willingly just say, oh yeah, I made a bad bet. I guess here's my house and here's all my worldly possessions. I'll go live in this refrigerator box. I just don't see that happening. They've tried crime and they've tried greasing politicians, and they meaning the hedge funds and the brokers that are behind all this. But there's 29. This other guy that you had on the screen a minute ago, Grant. He had another little rant talking about these 29 global banks that are considered too big to fail, that are so big. UBS is one of them. So's JP Morgan and Goldman Sachs. And I have no doubt that all of these banks are holding bags involving financial instruments that have a relation to GameStop, because you don't have to be short GameStop directly. This can be done through swaps. It can be done through ETFs that contain GameStop. There's a bunch of different ways of doing this, but I don't think.
And that's what makes the continual investment into GameStop so interesting, because we have these convertible bond sales, and the thing that we discussed in the last time we talked about GameStop is we've got all this insider buying. So you have Ryan Cohen, who's pushing more and more of his wealth into GameStop. He keeps buying the stock, and Larry Chang is buying the stock. And you see that there's all of this continued interest in taking on more and more of an ownership position in GameStop, which has all of this interest, this short interest on the stock. And the investors who are into GameStop, and very wealthy individuals, are not backing down. They're continuing the fight. And one of the ways that this fight has continued to play out on the side of the people who are interested in seeing GameStop succeed is they're raising money, they're selling shares, they're building up this war chest. The profitability of the company is going up. They're acquiring secure assets in Bitcoin, this is looking like a trade that is not going away for any of these big players. This is one where it seems battle lines are being drawn. And one of the things that I also heard about the whole situation with GameStop is that if the stock market goes significantly down, which we've been seeing, tariffs are in place and we're seeing this global trade war, is that a lot of the way that the short positions were funded was through other stocks. So if those stock prices go down in value, that we could see that some of those stocks would have to get sold off. And if they're being sold off at a depressed price, then you could start to see a spiral where GameStop sits at the center of a black hole, and the rest of the stock market, as it goes down, is acceleratedly going down because of all the short interest in the margin loans that exist, where once we trip certain prices, you see it rapidly go down from there because of triggered sell-offs. Dan, have you heard anything about that recently? Does that seem like it still might play out, or what's the...
That tracks. I mean, when you look at everything going down, the one thing that isn't is is GameStop. It's staying pretty stable. In fact,
it's like a stable coin. GameStop is the stable coin on the stock market. Everything else is going down 40 to 60%, and GameStop's just sitting here at like 25, just like not moving.
For the last more than a year, I've been selling covered calls on GameStop just out of the money and collecting rent on my shares every month or every week. A few weeks ago, when it was at 24, I sold covered calls at 26. I'm like, there's no way it's going to close above 26. That's max pain. There's going to be too many options in the money. It closed at 26, like 26.01 or something. So I ended up getting assigned on that, and I've been sitting on this pile of cash and playing spy puts, which sometimes it works, sometimes it doesn't. It's kind of dangerous, but waiting to buy back in on GameStop, waiting for it to go below, and it hasn't. It's at 27.07 now. And do you still have those links from Butt Farm 69?
No, maybe find that one for me real quick, and I'll see if I can pull that up. That's the funniest one that you've pointed out to me.
Right, and it's a long one. These 3-hour live streams, and I think he wants to be the next Roaring Kitty. He's just all chill. Maybe he's smoking a blunt. I have no idea, but he's got this interesting theory about these swap expirations, and the cyclical nature of them. And there's multiple timelines here, and he made some predictions, which we'll see. One of them was this week, the 420 event, the end of Passover. That kind of ties in with Ryan Cohen's I hope they don't put tariffs on gefilte fish tweet, which he deleted. Bitcoin's over 90,000 now, up 2,000 today. Yeah, Butt Farm has this theory that these swaps need to be renegotiated. And so when they're renegotiated, when they were first done, you're talking about getting swaps to hold shorts on a company that's a dying brick and mortar company that's, gaming's all on the internet now. This company's going down. This is free money. Just come up to the trough and eat some short sales and get free money. But now it's pretty evident that GameStop isn't going away, and they have to renegotiate these deals, and it's going to be at a different rate. So he was predicting some action possibly this week. Another prediction was the week of May 12th and also June 19th, or that week. Sorry.
So 420 was Easter, and yesterday we had whatever trading that happened. So is it safe to say that this guy's prediction didn't really play out, because we're just kind of hanging out as the stable price? So it seems like all these price predictions are never really come to pass unless this, because I think we got it on the screen right now. He's like, 420. And now we've got another price prediction target of just at the beginning of May. So maybe we'll see.
Yeah, maybe. It's definitely entertaining. If you've got 3 hours, which who does, I don't, but you can watch it at 2x and skip ahead. But he's got some interesting theories. He may not be right about everything, but he does point out some things I've never heard before. And it's just, more info for the hopper, I guess. But I think the next month with GameStop, next 2 months will be very interesting. Usually there's not a lot of activity over the summer, but there was last year, and there may be this year as well. So I'm hoping, you're looking at that chart there, and you get these big spikes, and then it comes down. And that's what happens with GameStop. It seems like out of nowhere, there's volume, there's huge price action, and he's correlated with this with expiring swaps, among other things. And if that's the case, I'm holding a bunch of shares that I intend to sell at this, on the way up, and hopefully rebuy.
Well, this is the reason why we spent some time talking about derivatives, because really what the speculation here is in GameStop is that a lot of what is happening is because of these derivatives. Naked short selling is not a derivative per se. It's a function of the market maker that was supposed to exist to ensure that the stock could always trade. Saying that when you're making a market, you don't want to necessarily have to wait for stocks to settle, because if we had a 3-day window during which that was occurring, then you could easily run into a situation where the stock couldn't easily trade. And so the market maker was given this facility to do some amount of this naked shorting, like they could sell and buy to make sure that the stock could always trade. But what's happened is some other players have somehow made their ability to also naked short, which supposedly was all shut down the last time we had a big collapse in the market. They said they were addressing this. And so one of the first things that you heard when GameStop had that hearing before Congress was that all of this was supposed to have ended and been shut down, and it's been pretty well proven that whatever the SEC didn't work at all, and that a lot of people were still doing what they were doing with naked shorting and were prepared to pay the fines and what have you. But in the situation that we're in right now, there's also all this derivative action with people making swaps and doing all this weird stuff that's so it's so difficult to understand, and the expiry windows and the way that we had the first guy on X that was talking about this, talking about ways that you could push these things out into the 3-year time frame, which is why the speculation around what will happen with these huge volume spikes is it has to do with the expiring of these contracts and the renewal of these contracts. So some people are getting rent on their shares because they're loaning them out or they're involving them in these contracts. And then when those contracts come due, that's when all this volume hits the books and causes these weird actions in price. So I think that's mostly what this investor and this person who is kind of recounting the story of GameStop and what might happen. He's saying that's what's driving these price spikes. That's what's driving these windows of activity is these swaps and this derivative activity that's coming due.
Yeah, and he's not been, like as you point out, Grant, he's not been 100% accurate on his dates and predictions. But I think there's still something to this theory. It does explain a lot, and it's interesting to watch and entertaining either way.
So, Lucas, when we think about GameStop and now that they hold a Bitcoin position, or I think they purchased the Bitcoin, regardless of what happened with that convertible note, I believe that the intention was that they were going to take that money and go buy some Bitcoin. I don't know that we've had reporting that they actually completed the purchase of the Bitcoin just yet. But as we think about GameStop buying Bitcoin and continuing this trend of global corporations having a reserve asset disconnected from their nationality, this is something that you're thinking about when we think about global corporations and disconnecting them from their nation states.
Absolutely. There's this narrative that has existed since globalism really began to take off, and I'd say I mean, it's as old as history, but Bretton Woods in one way was about encouraging globalism. NAFTA, we've had these sort of a kickback against or a pushback against globalism, and there has been some sort of expectation that is prevalent in the media that nationalism is on the rise and that globalism is in the target. But have not thought that this is something that we can unwind. And I think that we will begin to see global corporations that have come out from under the thumb of the nation or any one nation in which they reside. So this is why I think GameStop is so very interesting, because also with the inception of the Bitcoin, uh, it became interesting to think, what can a nation state do if they're not watching their ports and watching their borders to make sure some CEO doesn't sneak out with a bag full of gold and run to some other country where they can have preferential treatment. And that is in some way a threat. Why did so many global corporations stay headquartered in the United States, in and stay tied to their taxing regime as they moved their production around the world? Well, that answer is not so much about watching the borders for gold, but because this is where dollars came from, and the whole world was addicted to the dollar system. So, whether it goes back to gold, or whether there's something that's more portable like the Bitcoin, um, countries are going to have to reestablish their relationship with global corporations, because global trade and the efficiencies of global markets are obviously something that I don't know that we're addicted to, or that are just are the greatest possible solution to commerce in the world. So, yeah, that their whole
I think if we see this one play out somewhere, we might see it play out with Google. We did a whole episode on what was going on with Google, and that they had this showdown with the DOJ, and that they had lost, and that they were going to get broken up. And now it looks like this fight is not quite over yet, because Google is pushing back on getting broken up and saying this is a threat to U.S. national sovereignty, because we're so important to the U.S. economy and we can't be broken up in this way. But if Google were to say, you know what, this regulatory stuff that's happening in the United States, we're a global company already, we're going to move our headquarters out of the United States. Do you think that might be possible, or is it too seated and rooted in the whole world of Silicon Valley and San Francisco that they could never contemplate being outside that vein of power in California?
Because technology companies are so tied to defense, I think that both technology and communications will have a more nationalized relationship. But
More
GameStop,
than it already is. I mean, it seems like all of Silicon Valley is just a front for the DOD. Isn't that how
well,
it works?
the front will become less. The front will become less like passed through, the university system. Like, very interesting too that we're seeing the defunding of universities. But it's also, there are massive flaws in in Google and our tech sector as security flaws, because of our reliance on production in Taiwan, and the the input of the resources from around the world. I think that actually is the sector that will become more nationalized. Um, so Google, I don't know. Maybe Google becomes something more about ad revenue, and becomes looks something more like AOL did in the early days of the internet, and becomes some sort of a walled garden of an internet experience, and they move out of the United States so they can continue their selling of the users' data with regards to the ad department. And I mean, because to me that's where Google has really gone, is getting into trouble with the DOJ. So they might break off and continue that. But as far as their standing with regards to, I don't know, AI and communication, the Android phone, etc. The United States is going to throw their money at companies that they continue to control, and they're also going to try to put the best minds and the best ideas in companies that they control.
Well, GameStop is certainly in that vein of global corporations. I mean, this is not a U.S. centric company by any means, although I think they had a significant presence here. But this is an international company. They've got locations all throughout the world. So even as this global trade war is heating up and that these import tariffs are causing significant impact in the United States, GameStop has stores, I think, in every continent. So, them being a global corporation with an asset which is not tied to the U.S., with significant revenues that are outside the U.S., this whole idea that you could have these corporations that are moving their headquarters, moving their significant positions outside the United States, if this is the vanguard of the next wave of corporate governance and whatever, where do you think they might land? I don't think the EU is where these U.S. companies want to go. I don't see another good house for where they could land. It seems
They're
to me
gonna
that, yeah,
they're gonna land in Iran. That's where they're gonna land.
That's an interesting theory. That is exactly what Iran is hoping for, is more American investment there so they don't get bombed. We have a new SEC chair too, Paul Akins, and that's not been discussed yet. I don't really understand the full implications, but I think he has expressed an opinion that is that naked short selling is an abusive practice and needs to stop. So that's a pretty bold declaration for somebody in his chair.
But as the United States is beginning to discover with its sanctions and the use of the dollar around the world, the SEC is also going to be put in this position of not being able to make rules that they can enforce. So, and the SEC's greatest power is in enforcing disclosure. We also think about bond rating agencies or credit rating agencies that exist around the world. Those are to educate people. So I think the SEC has got to be thinking about how they are going to address companies that they no longer control, because some of the tools that they've had in their bag of tricks are going to be dulled or no longer useful.
I think that's particularly going to happen if we see the tokenization of companies busted up onto blockchains. That's when we start to see this happen, then the regulatory agencies have less to do. I think it's a lot of this has to do with these weird settlements, the way that these stocks are accounted. But when you have perfect ledgers like you do on blockchain, some of this stuff might tend to drift towards that's a thing of the past, and we'll have to see how all of this eventually plays out. But we're right at time, so interesting for us to catch up again on what's going on in the world of GameStop. I love that we were able to bring into the conversation some of what's happening with the trends of corporate governance globally, the holding of Bitcoin. We'll certainly keep a steady eye on it. As of today, no real interesting price spike in GME, but still an island of stability even with markets up. So we'll keep an eye on it, and hopefully there'll be some news here around the next convertible bond, because if we're right on this one and we've got our thumb on the right part of what's happening with the whole GameStop saga, then expect more of these convertible bonds, more of this Bitcoin buying, and that this is people getting their way out. And if Ryan Cohen is now in the position to start brokering these deals, I kind of imagine him as this, sitting on this throne as each of the supplicants come in and proffer their gift and kiss the ring as they try to get out of their short positions.
Exactly. Thanks for having me on, guys. It was a good talk to you all again, and we'll see what happens.
Yeah, good to have you back, Dan. All right, we'll see y'all later.
See ya.